Yo, what's up everyone? My name is Andrew Warren, and in today's video, we're going to be doing another transparency update with a portfolio, breaking down every stock that I own, including the losses for today. Unfortunately, no gains for today so far. As you can see, we had a pretty big drop for the portfolio. It's currently at a little over minus 3% right now. But anyways, as always, if you do enjoy the daily content where I just update you all on the portfolio, talk about the various stocks within my portfolio, especially including Tesla, then please make sure to drop a like on the video, smash that like button. It really does help me out, and it also helps these videos get recommended in the YouTube algorithm. So with all of that being said, as I mentioned earlier, for today in the normal market hours, we lost 3.37% of the portfolio, which is minus $3,606.98. And then for the after hours so far, we're just barely in the positive at plus 0.05% or plus $54.78. So it has actually been a pretty long time since I've been under $4,000, I believe. I mean, we can just look at the monthly chart and see when we were last at this point. So we were last at this point, let's say July 8th. So it's been about like 20 days, 16 days since our portfolio has been this low of a value. But just starting it off, the market began in the pre-market at 9 a.m., way under the baseline. So if you see the stocks over here, every single one of them were performing poorly at the beginning, and we started out at minus 3.07% or minus $3,292. Then we had a little bit of a dip with a rebound right here until it finally spiked down to this point, rebounded up again with a dead cat bounce, and then spiked down to this lowest part of the day here at 9:50 a.m., in which my portfolio was at over minus 5.61%. or minus $6,014. And then pretty much ever since that point and that part of the day, it climbed up just a little bit with a bounce and then a rebound back up and then spiked back down with a rebound back up again. Hit this point at 11 a.m. at exactly minus 2% or minus $2,141. A ton of volatility over these next few hours until it finally hit this low point at 1:15. That was at minus 3.91% or minus $4,189. Then it rebounded back up from that point with a few bounces here and there, dropped back down a little bit, bounced up, and then ended the day at this point at 4 p.m. at minus 3.38% or minus $3,624. And then after that, we've just seen a few minutes into the after hours. It's like 4:05 right now. So we had just a tiny rebound since then, and that's why it's at plus 0.19%. I always like to just break down these subtle movements that my stocks move during the day with my portfolio, but really movements like this don't really matter when it comes to investing. Unless you're day trading, all of these movements don't really matter. It's just kind of fun to see what happened throughout the day. If you're really worried about profits and making money in the stock market, what you really want to focus on more instead of the short-term stuff like this is just the long-term action. So, like, how did the stock perform over the past 5 years? And then also break that down as, like, how did this stock perform over the past 2 years? What's the average per year? Graphs like that and information like that is much more helpful when it comes to picking solid stocks and seeing how they will do in the future compared to kind of irrelevant short-term things like this that don't really matter unless you're swing trading or day trading. So with all of that being said, there has been some talk about another stimulus coming in. That would be another $1,200 per person, I believe. And that's definitely something that could stimulate the economy again. There were definitely a lot of people that really used the stimulus checks last time, and I think that really did fuel the economy in addition to unemployment, plus that extra $600 per month pandemic edition for unemployment. I believe that is closing in July, if I'm correct. But that unemployment, along with PPP loans, the Fed's printing money and buying bonds and stuff like that, and then also, of course, the stimulus check, I believe a lot of these combined together to prop up the economy when it would have otherwise gone really downhill. We would have probably seen the 2008 type of things, and honestly, that's still not out of the picture just yet. It's still very possible that we could have another 2008. Honestly, it feels like the perfect storm, especially with the election coming up as well. I mean, if you think about it, in 2008, I believe it was like October or September when the crash started, and it just went downhill and just kept going down and down into a recession for what seemed like forever for many people. And that kind of seems similar to the perfect storm we have right here, especially with the upcoming election, like I said, where there's a lot of people that are unsure who may actually be in office by the time of 2021. And that obviously is going to affect investors. And really something to keep in mind here is that there are some genuine worries from investors out here, because one candidate is saying that they want to tax Wall Street, and we've had the statement against the long-term capital gains tax, but in my opinion, I really think it's important to have like that discount on taxes as a reward for holding stocks for the long term, because that's what keeps everybody from just simply wanting to day trade all the time, because there is a benefit for a person holding shares of a company for the long term rather than just trying to day trade constantly or swing trade and just not hold shares long term. And I think really this 20% capital gains tax compared to just paying your normal tax rate, that reward for holding a stock long term, I think stimulates the stock market just as much as a stimulus check or unemployment stimulates the economy. It does it in its own ways, and it keeps long-term investors the dominant factor in the market as well. So I honestly am pro the discount capital gains tax, where you're not taxed at your normal rate, because that stimulates people to invest in the stock market long term. Therefore, it's more beneficial for companies and the whole economy as well. And I also just think that there's the common misconception that everybody that invests in the stock market is automatically rich, and that's one of the biggest misconceptions in my opinion, because the stock market is just one of the most equal things out there. Anybody that is of age and has money can invest, and it's easily possible to gain like 50% in 1 year, similar to how I did. At one point we were at like plus 50% for the year. So anyone can gain a lot of money out of the stock market if they do make the right stock market decision. So in my opinion, if we're just discussing things in terms of the economy and the stock market, I think there's a lot of, especially it would impact much richer investors out there, but I think there's a lot of really rich investors, and then also just normal people like me that are planning to invest for the long term, that they may be a little bit worried about what is coming up with the election sometime soon. And if we're going to address the main factor here, a lot of people may consider pulling out of the stock market and just taking their gains if they think it is likely that there will be something passed to raise taxes on capital gains taxes, so therefore their profits in the future won't be as much as what it would be if they just pulled out right now. Or they could simply just think that something like that being passed would cause a stock market crash in the future, so they may be pulling out before that future crash. So I think there's a lot of people just generally in the stock market that are worried if there's going to be any changes to like the tax rates and stuff like that in the future, and that news of that could potentially cause the stock market to crash because of so many other things going on in combination with that news. Then I think there are some investors that are either a little bit concerned or worried right now, not only because of the Rona, but like I mentioned, things like that being passed in combination with all of these other bad economic situations as well. So it does seem like we are in an uncertain point of the market, which could be contributing to why some of these stocks are dropping significant lately, especially with Tesla. I mean, honestly, if we look at the portfolio today so far, the only one that really got hit super hard was Tesla. I mean, Microsoft didn't get hit too hard. Yes, it's kind of low considering the last time it was at this price tag of $202, and then Apple as well is dropping a little bit, but none of the stocks in my portfolio other than the free one at Tesla dropped significantly for today. So it really just seems like Tesla is taking a major hit, and honestly, this is something that I expected. I'm not surprised because I knew there would be an eventual pullback. There has to be some volatility with Tesla. It's just natural. It's one of the most shorted stocks in the stock market, and a lot of people day trade this one as well and mess with options on it. So this is just one of those stocks that has a volatility almost similar to like Bitcoin, because people like to trade it and mess with it a lot just because it's so entertaining of a stock to keep up with, I think. And then also there's just a lot of potential gains to be made when you have like -6 +8% movements day to day. So like I said, there is a pullback, but with this pullback, I think it's more just presenting itself an opportunity for the future for those that do have cash on the sidelines. Honestly, I don't know the limit on how low Tesla could go in terms of a share price if the stock market were to crash. So that's one thing to keep in mind. You never know if it's going to go lower or if it will never be as low as it is today. So that's kind of the difficulty on timing when you should buy in. And that's why a lot of people also just simply recommend dollar cost averaging on stocks that you believe in for the long term. But in my opinion, I think for the long term and looking in the future, especially just over the next 10 years, I think $1,400 is a great entry price for Tesla. Yes, it is still at a premium, but I think Tesla may always be at that premium just because people know the potential behind it. So like with Apple stock, you may have to pay a little bit of a premium, but honestly, in the end, I think it could be worth it in terms of just the future positive news that will be coming out. And I think that Tesla is just one of the biggest innovators in the game out there. It's one of those companies that is still working toward efficiency and optimization, and that's something a lot of companies and especially automakers aren't doing right now. They don't care about cutting some extra cost and making some small differences that that increase their effectiveness and efficiency. So I really think that Tesla is one of the great innovators. And in addition to the benefit of innovation, they also have that major factor of optimization, which in combination makes it just such a fantastic combo, especially in terms of just saving money and also increasing profits. So with that being said, even if Tesla crashes more in the future, I'm honestly not going to be surprised, and I'm not going to be disappointed as well, because it's just an opportunity, and it's kind of something I knew would happen eventually. There's always going to be that pullback when you have such a high up run of Tesla stock going up like 10% 4 days in a row. So it was about time for a pullback, and I'm honestly just not surprised, and I'm still looking positive for the future of Tesla. So just addressing today's return, we got minus 6.2%, which is minus $3,226.74. Then for the total return, we are at plus 67.47%, or plus $19,675.90. Then next up, we have Microsoft stock. This is another one that dropped just a tiny bit today compared to Tesla. Not too much, minus 0.59%, or minus $232.05 for today's return. Then for the total return, we are currently at plus 17.48%, or plus $5,842.53. So a little bit of a loss today, but we're still pretty positive for Microsoft overall. And then finally, we have Apple stock. This one lost 0.23% for today, which is only about $36.54. And then for the total return, we still have a great solid gain at plus 29.57%, or plus $3,551.34. So with all of that being said, nothing but losses for today. Even with a free stock, this one has actually been skyrocketing recently, but the free stock is down significantly as well today. But overall, it's something to be expected. I mean, this is just a normal thing with the market. Even if this is the start of another crash, it just means maybe over the next year or so, or next few years, I'll have a big opportunity to keep buying in at a low cost. And I honestly wouldn't complain about that. So I really don't care if the stock market crashes or if it goes in the green just continuously in the future on a bull run. But I mean, I would prefer a bull run, but if the stock market does crash, then it's just more opportunities. That means that I just need to keep grinding even more, keep earning more money to put into the stock market. But anyways, I hope you all enjoyed this video. Just wanted to share some of my perspectives on things. If you did enjoy this, please make sure to smash that like button. And also, feel free to check out Robinhood and Webull in the description below. I'll leave my referral link, and if you sign up with that link, then you'll get some free stocks. You can actually get up to 60 free stocks right now. For one thing, if you just sign up with my link, you get one. If you deposit $100, you get an additional one. And then you can also get up to 60 free stocks depending on the amount you deposit. So that's pretty awesome. Nice passive income. But I hope you all enjoyed this video, and I hope you have a fantastic rest of your week.